It's Wednesday, May 7th. This is an end of the day SPY recap, and today, midweek, Federal Reserve announcement day, we end up with a 3 bar. Well, technically it's a 3 bar that took out the low of the previous day and the high of the previous day. I'm going to consider it more of double, like an inside bar, just kind of within a range here. You can see between the blue lines was the pre-market range. And if I spread out the 15-minute chart the last couple of days, I see this as just a choppy range at the moment. So now we have the reference points, to similar to today, where we, had pretty wide pre-market range. We wanted to see if we would break out above or below. Now we have 2 days of overlapping data, and we'll see what the pre-market range is tomorrow. But the bottom line is we got to break out of this, either these highs or these lows down here to know where things are possibly going next. As we get closer and closer to the end of the week, with 2 more days to go, number one, there's still the bias that we're going to take out the high of the previous week. We're just holding inside the midpoint of that week, and you had a green bar from last week. You kind of expect that to be tested, at some, if not, then it looks more and more like we're getting an inside week here, possibly, and then that could lead to, a potential breakout or failure going into next week, but we'll figure that out by Friday. I'm still biased to the upside. Doesn't mean it has to happen as we kind of move along during the week here. If it becomes Thursday and we fail to head up, then all of a sudden time's running out to get up there. So I'm keeping that in mind. That's why tomorrow's a pretty interesting day, but it's very similar to today in the sense that we're going to have, see if we open up either above or below this range. That's one thing. If we open up inside of it, we're going to have to see if opening price action leads us to a breakout or not, and be very nimble until that happens. So today, if we look at the charts, first of all, it was Fed day, so you had a feeling it would be well, first of all, once I saw, I shot a pre-open video saying how we were opening right in the middle of a pretty big pre-market range here between the blue lines. So that by itself made it tricky. It was going to be an inside day from yesterday. It's an inside week, so we knew it was going to be choppy. But the market did kind of start up green and then break out on bar 2. The thing was, at that point, you want to see it really head up to kind of the pivot high here and the pre-market highs and get a 2-up day. And you had 1, 2, 3, 4 bars an hour where you're watching it and you're kind of up on this trade if you would have made it. And it wasn't even giving you a chance really to scale out and set up a no-risk trade. It wasn't moving up enough, and it wasn't certainly building momentum up there. And it's Fed day. So to me, if you were in this trade, you could have watched it closely and just broken even. Obviously, once it came back to the midpoint of that bar, first bar, that was a certain sign to get out. You kind of sense that once it was coming back to the midpoint of that bar, it was then going to take out the low of the day. It doesn't mean it was going to be a sustained move, and that's what happened. We came down and took out the low of the day. I discussed then how after watching it kind of pause here, green 2 up, I decided to buy some calls here with my upward bias overall still in place, knowing we're just in a choppy zone, and I actually exited up here before the Fed announcement, just knowing that you're going to get a lot of volatility. So obviously after the announcement, what happens? We come down, we take out liquidity again on this inside bar. We took out the lows of the day and we took out the pre-market lows and immediately bounced up. I'm not saying to do it, but to me, if you wanted to kind of recreate this trade right here and buy this 2 up, you would have had at least, another move up to the top of the range. And then at that point, obviously, it became very volatile. It went down a little bit, then it goes up, and then we close kind of inside the range. So, it's not even a day really to be trading the SPY. I was looking at some other individual stocks. Bottom line is you kind of knew it was going to be tricky in terms of inside price action, in terms of a key, economic announcement and everything else. So not surprising again to see, and this is a good example again of what price really tends to do, whether it's on this time frame or bigger time frames, this broadening action all over the place where it moves up to the targets, lower low. This it kind of got up to the highs, but then a higher high up here, made a lower low, and then it just, on choppy inside days, you're not really going to get follow through. So the only way to even play these days is to kind of, played the extremes, buying down at the lows and selling at the highs, but I don't typically trade that way. Although I did it here, it's just sometimes you look for liquidity grabs with when the context is the other way. So that's all today was. I'm not saying it was an easy day to trade, but you should have almost not been doing anything if once you kind of tried to take this trade and saw that after an hour it wasn't going anywhere. At that point, it really confirmed the choppiness that was likely to unfold. So we end up with kind of a double inside bar here today. Technically, it's a 3 bar, so it's not even an actionable signal. We could still, in other words, we can get higher highs and fail and come back through the range. We can try lower lows and fail immediately and then come back up. I mean, so I'm just going to treat the area as a breakout, zone though, and know that if we kind of stay in the middle, it's going to be tricky again. So just one of those conditions at the moment. But I'm still, if you look at it, this is still an upward kind of move that just pulled back for a few days and is trying to hold green day after day after day. So, in the big picture, it doesn't look all that ominous. I mean, it looks like it's, just kind of a typical pause on an uptrend. So we'll keep that bias in mind. I mean, I'm still, keeping that bias until proven otherwise. So we will see what happens. And again, we're right here at this red line, which is the open of the month. So as long as we stay above that area, we stay green. So that's why after all this consolidation, if we start up again and really break out of this, that's not only a breakout on the daily chart, it's also a confirmation on the monthly chart, the bigger picture, that we're still green. So let's see if that unfolds. But, now we have 2 days of overlapping price action to monitor.